Hey, this is Jenny Kassan here, the queen of getting your business funded. And I just was inspired today to share something that I put together for, I was a guest speaker on a webinar for Social Venture Circle. And they asked me to just do a really quick talk about alternative investing, alternative capital raising. So I just wanted to share what I shared with them. It's quick, it's 5 principles or 5 points that I wanted to share. So number one is, who are investors? So if you're raising money and you're looking for investors, who are investors? And I think one of the biggest mistakes that people make is they totally have misimpressions about who investors are. So investors are more than half of the adult population of the US. That's who investors are. When people think of investors, they think of active angels, people who go to angel investing groups. They think of venture capital funds. They think of professional investors. But 99.7% of the investors in our country are not those people. So that's something to really get clear on, because as long as you're wasting your time chasing after 0.3% of the total pool of potential investors, you may not be finding money. I'm not going to say it's a waste of time for everyone, but for a lot of people, that 0.3% isn't where you should be looking. You should be looking at the 99.7% of investors that are not professional investors, that are just regular folks and don't have preconceived ideas often on what is the right way to invest. They're much more open-minded and potentially excited about what you have to offer. So that's number one, is just thinking about who investors are. Number two is, what is alternative? So I was invited to speak on alternative forms of capital, but I don't think of what I'm talking about as alternative. The whole venture capital model, which is the model that so many entrepreneurs are told they need to be pursuing, the types of investment they need to be pursuing are these professional investors who are using the venture capital model, where they're coming in and expecting you to grow your company as fast as possible and be the next unicorn. That model did not, get brought down from the mountain by Moses. That was invented by a few guys in the 50s. And it's a model that has worked well for some companies and for some venture capitalists and for some investors, although from what I understand, on average, it doesn't work very well. It's a real black box type of investment model, but it's just one investment model. It's not the only way to invest. And like I said, it's quite recent. So we don't even have that much data on how good of an investment model it is. But one thing that I know that's been happening for hundreds and hundreds, if not thousands of years, is that regular folks have been getting together to pool resources to support ventures that they care about. So what I call community investing, which is the type of investing I help my clients do, where anyone can invest in what they're offering, their customers, their suppliers, their family, their community. That is actually not the alternative way of raising money. That is the more normal way that's been going on for hundreds and thousands of years. I think venture capital is alternative. Point 3 that I want to make is the question of the terms of the investment. So there's a lot of standard investment models out there, standard term sheets that people can just pull from the internet and use that as the way that they're going to bring on investors. But I think it's really important to really think hard about the terms that are going to be offered to investors, because it sets up a relationship that you're going to have for maybe 10 years, maybe more, with your investors. And you want to really think about what that's going to look like and take the time to design it and customize it to your particular situation. So no off-the-shelf terms, and who is best to set the terms? So in that venture capital model and the professional investor model, it's the investor who sets the terms. And I actually think, and I've been on both sides, I've raised money and I've invested, but I honestly think the best person to set the terms of the investment is the leader of the business. because they know better than anyone what their plans are for the business, what's likely to happen, how quickly it's likely to grow, what challenges lay ahead, what their goals are for the long term. And so it really should be the leader of the company that's setting the terms, not the investor. And definitely, again, customize, not one size fits all off the shelf terms. The next point I want to mention is the legal compliance piece. So some people will say, well, Jenny, I know you're saying that over half the adult population is an investor, but I thought I wasn't allowed to have that kind of person as an investor. I thought those people were only allowed to invest in the stock market. But it turns out the legal rules, there are many legal ways where you can bring on anyone as an investor, anyone. Even if that person has never invested in anything before in their life, even if they're not wealthy, even if they have no knowledge about investment, even if they don't have a college degree, no matter what, there are legal ways to bring on anyone as an investor. Now, of course, there's a lot of ethics that you want to take into consideration with that. You want to make sure that anyone who invests in your business understands that they shouldn't invest more than they can afford to lose. But guess what? That's true of any investment. And a lot of people would like the opportunity to invest in your business because they know you, or they will learn about you and learn that you are passionate about your business and you're going to work really hard to steward their money and make your business successful. So the legal compliance piece is just to tell you, really anyone can be an investor. So don't limit yourself necessarily to the people that you think are the ones that, that your lawyer is going to tell you are the people who can invest. And then the fifth point is actually just an example I want to give that kind of is one company that personifies a lot of the principles that I'm talking about. And that's a company called Equal Exchange. And they're based in Massachusetts. They sell coffee, chocolate, other foods. They purchase everything that they sell only from, fair trade, beyond fair trade, like the most socially just types of suppliers, growers. I think they only purchase from producer-owned co-ops. And they're an incredibly socially responsible company, also very successful. They've been around for a long time. And they raised money using these principles that I'm talking about. So number one, they did not limit themselves to professional investors. They opened up their investment opportunity to anyone. And so they have, I think, over 500 investors. They've raised over, I believe, $20 million over the years. They've done multiple raises. And so they took that principle to heart that anyone can be an investor. They also took the principle to heart that there was nothing weird about an alternative about doing that. They proudly said, this is the right way for us to raise money. They set the terms. They didn't ask their investor to please lend me money or invest in me on the terms that you want. They set the terms of the investment, and they designed their terms in a way that they knew was going to be what really fit for their business. So in their case, they designed actually an equity instrument. So investors are getting stock ownership, a piece of ownership of the company, and it's non-voting. So the company is not giving up any control. It's all the workers that actually control the company, control the decision-making, elect the board, etc. And they pay an annual dividend, which they're not required to pay, but it's a target dividend. And they also have something built in because they know they never want to sell the company and they don't want to be pressured to sell the company. They have something built into the terms where no one can ever have, the value of the investment can never increase. So even if you were to exit the investment by requesting a redemption of your stock, you could only get back the same amount that you put in. So they really were very thoughtful about how they designed this investment because it fit exactly with their goals and values for their business. And it's done super well. They actually have people on the waiting list to invest in their company because people who invest are consistently getting a nice annual dividend from this company, and they feel really good, and they get to go on trips to visit some of the supplier co-ops. So it's just people love investing in this company. So there can be a lot more companies out there that use similar terms. And by the way, there are others. I've helped many companies do similar types of offerings, and there are others that have figured it out on their own. Modeling after Equal Exchange, which was one of the very first that I know of to really take these principles to heart. And in terms of legal compliance, they just got pretty creative and figured out how they could legally raise money from regular folks. So those were the 5 things I wanted to share that I had shared on a private call with Social Venture Circle members the other day. And I just thought I would take the chance to share it with you today. So thank you so much. And, if you want any more detailed information about anything, feel free to message me. I'm happy to share more resources. I also have a lot of resources on my website, jennykassan.com. Thanks. Bye.